Hello, and welcome back to the podcast. Today, I'm talking with Joey Isaacson, co-founder and CEO of Nook. Nook is a savings app that connects everyday users to on-chain lending markets through a simple mobile product. Joey, welcome to the show.
Ryan, thanks for having me. Great to be here.
Yes, thanks for still hopping on. Today's April 20th, and we just had a crazy weekend in DeFi. So we'll probably talk about that a bit today as well. But maybe to get started, for anyone who's not familiar, would love to learn a little bit about Nook and kind of what got you excited about this product space generally.
Yes, absolutely. So Nook is a platform that connects you to these markets. And when I say connects you, I mean we are a wallet. You deposit your cash, and then from there, you're able to easily connect straight into these vaults, either through Aave or Morpho. And if you know about the DeFi space and you've been in it for some time, that's pretty easy. But for the 99.9% of people out there, even in the United States, across the world, who have never touched this technology, it's really hard and intimidating. And so that's why we created Nook, to be the easiest way to earn on your cash. So it's right now just across 8 lending sources, but we're working on more. And it's only USDC, but we would love to expand that across different assets as well for different geographies.
Yeah, makes a ton of sense. And to a large extent, feels like it's something that's kind of missing in the, sort of earn category. I guess my question is really around your users and kind of the archetype of these people. I'd love to learn a little bit more about how they're finding you guys, or where you're finding these users when they're coming to you. What's their level of familiarity with all of this?
Totally. Yeah. So we're really speaking to people not too dissimilar from ourselves, right? So kind of stepping into that question, the journey I got into crypto wasn't really about the technology, it was about the people. So about 5 years ago, I was at Uber working on the future of freight and trucking, and helping truck drivers access the Uber network to access loads more easily and basically adapt to the modern era, because they were still working off of pen and paper and phone calls. And I was approached by a friend of mine and colleague to help lead a design team at Coinbase. Coinbase is going through a transformation in terms of they were very crypto forward. They were completely focused on trade, and that was their bread and butter. That was 95% of their business. They had a staking business that was still very early and several other product lines, but it was really just a crypto trading app at that point. Now, fast forward to today, 5 years later, I believe that those non-crypto trading services do several $100 million of revenue per year. It's really a different business than it was half a decade ago before I joined. And so leading that change, I realized oh, wow, there's a lot of great crypto primitives in this ecosystem that are largely misunderstood, right? It's not just about trading assets, but there's also this area of DeFi, including staking, lending, and other ways you can position your funds. And it was just wrapped in a lot of technicalities for a lot of reasons, right? It was wrapped in engineering speak. It was wrapped in finance speak. It was wrapped in crypto speak. And so if you take those 3 Venn diagrams and you overlap them, it can be really hard to get into DeFi, because any one of those vectors can really kind of come with its own language and culture and vibe, and make those who are not part of that Venn diagram feel very left out. So what we started with Nook was, hey, let's explain it in traditional terms, right? So we don't use crypto terms like points. We don't use the crypto terms of airdrops, rewards. We say, hey, this is interest. This is your principal. This is your deposit. So if you're familiar with a savings account and the concept of borrowing and lending, you can easily transition into Nook. Nook is not a savings account. It's not FDIC insured, but we want to make it look and feel as similar as possible to a traditional finance app, or a TradFi neo finance app, so that people can understand it. And that's our main message. And where we meet these people is outside of the crypto spaces, right? So really not on Twitter. I love Twitter. I love the discourse there and all the incredibly smart people like you and the Vaults team. But we really meet people on Reddit. We meet them on Meta, including Facebook and Instagram. And then we meet people on TikTok. And we just share this message here of, hey, this is how Nook works. Here's how it compares to a bank. Here are the upsides and the downsides. And that's really been the best way to kind of facilitate that message, is meet people where they are versus throw things like very high percentage points at them, or airdrops, or kind of the typical crypto playbooks. Those tools don't really work in the regular world as well. So it's a bit of a trade-off, right? Like, we're not a darling of the crypto world in terms of we're not releasing a token anytime soon, but that clarity also helps when it comes to communicating and working with everyday people, in terms of that doesn't get in the way of that kind of vernacular that we spoke about earlier.
I love the caveat of anytime soon there, but we'll put that to the side. Yeah, it's funny. So I'd say this, we're on the opposite, obviously, right? The one place I guess I have come across Nook a lot is on Reddit, because I've been posting a lot more there as a result of kind of the SEO and
Yeah.
AEO things, always giving so much credit to Reddit. But yeah, I'd love to understand too what you're doing on meta properties like Instagram and Facebook. Are those just, you're running traditional ads through those? Are you doing something more kind of grassroots feel, or what does that actually look like in practice?
Yeah, we've tried it all, and we keep trying. I think the name of the game on distribution is just iteration, right? And so I think we've seen a lot of really successful companies in other spaces run this playbook of distribution through content creation. And I would say there's two main levels of it in terms of how do you get someone's attention. So if you take a step back, the top of funnel really looks like get someone's attention on Meta, Instagram, TikTok, and then at the Reddit level, they will go and verify. So if you get someone's attention and you tell them, hey, this is what Nook does, this is what you can earn, they're not going to go and immediately start depositing into Nook from a 10-second TikTok reel or Instagram reel. They're going to go into Reddit, kind of go into our Instagram page, go into maybe our X page and verify more about how we work, our reviews, and how it's really substantiated. So Reddit is good, but the top of funnel, it's really about creators who we partner with, and then content from there, and just constantly iterating. The main creator that we partnered with, who's become an advisor to the company, has been instrumental in helping us spread this message, is Eric Pan. He used to work at State Street Betterment, and so he has this amazing experience in the TradFi space, but he also has worked and advised for other crypto companies like BitGo, et cetera. And so from there, what he's done is he's built up this audience of 300,000 followers, and he's been able to basically straddle this line between people who are interested in traditional finance, but also want to explore crypto. And that's where Nook and stablecoins makes a really good fit, because everyone's heard of stablecoins. Everyone's heard of the Genius Act or the Clarity Act, maybe a little bit, and they know something's happening, but they don't know how to leverage that. They don't really know how to earn from that, right? Coinbase Circle going from 0 to $300 billion in circulation of USDC is great, but has the average person benefit from that? Not really. And so that's where the message of Nook kind of kicks in, and that's how we've been able to reach people. So cross-posting with Eric, collaborating with Eric. If you go to Nook's Instagram page, you'll see a lot of that there. And it's really just about trying to reach those mainstream people. So if you look at Nook's Instagram pages and handles, we reach not as many people as an app like Aave, but we reach a fraction of, let's say 1/5 in terms of views, total page views, et cetera, and followers. And so that's how we think we can punch above our weight, right? Is we're not going to have the $70 billion of TVL that Aave has and the very large team. But if we focus on this consumer and we reach these people efficiently, we can serve a role in the ecosystem of finding those people and bringing those people on board. And that's what separates us from a behemoth, like a large protocol.
Yeah, agreed. And as you're taking a look at your Instagram right now, very nice.
Thank you.
And I'll have to check out Eric's content as well. I'm not familiar. I'm do a little dive myself. I'd love to see the kind of stuff that you're making on TikTok too. Is it more, hey, here's how to use the app, person talking to the camera type stuff, or what does that actually look like?
That's a part of it. I would say we've seen these playbooks by companies like Whisper, Flow, and Polymarket basically generate these armies of creators, right? So these apps now have 30 or 50 creators constantly posting, and they could be posting 20 videos a day, hundreds of videos a week, trying to find that hook that sticks. It's all about that first 4 or 5 seconds. So I think if you compare it to Twitter, where you have these companies doing articles and very long pages on how this protocol works, that is the complete opposite of what works on these social media formats, right? You have to be able to, within 3 seconds, hook someone and say something like, hey, do you know what your bank account is earning you? And that's it. That works great. You maybe have bought yourself another 2 or 3 seconds to be heard. If not, they're moving on to the next message. So I know that sounds ruthless or ineffective, but that's the reality of most people in terms of how they look for new information or just retain information. So we really try and distill it down to the main premise, which is Nook equals earnings, right? If I had to give you one word for Nook, it would be earn. If I had to give you a couple words, it would be earn more, earn twice on your bank account. And so we really try and limit it to that message of earn more. And then if you're interested, then we can teach you about how the app works. And then from there, who our team is, how it works behind the scenes, and really go in depth. But at first, you really only have a couple of seconds.
Hi, this is Ryan, your podcast host. Our team built vaults.fyi, It's a single app for managing your DeFi positions across almost 100 protocols, including Aave, Morpho, Fluid, Lido, and many more. When you deposit, your funds go straight into the protocol. No wrappers, no middlemen. We prepare the transaction, you sign it, but we never hold your money. Once you're in, you can track your positions and returns across everything in one dashboard. If you've enjoyed this podcast at all, try it out at app.vaults.fyi. My DMs are open on X and Telegram, and I love when you reach out. Now, back to the show.
Yeah. Okay. And I guess, so let's go through this flow, right? So user discover you guys on TikTok, they go Reddit, they check it out, seems great. They go download the app. What from there is still the toughest parts that you guys are navigating? Like, where are you seeing people drop off, or what are you still working through there in that flow?
Yeah, absolutely. So I think the first thing is trying to build trust, right? Once we've got them hooked, it's all about trust, because people will see the rate of like, oh, it's at 6%. That's double what Robinhood is offering. That's a pretty no-brainer in terms of the rate, right? A 2x is pretty good and worth your 15 minutes of time. The question now is trust, right? So does the person trust it? So within those first few screens, you have to validate that you are legitimate, that this is something that you can trust, and to set the right expectations, right? In terms of DeFi, I don't think it's to the place, as we saw this weekend, where you should put your life savings into it. I still think you should have your emergency cash in place. And I still think it has a place in your financial stack, depending on who you are, in addition to stocks and traditional investments. But it's still a very powerful tool. So how do you build trust, right? And so within those first seconds of onboarding, we asked very primitively, hey, let's get your email. Let's tell you basically the premise of how Nook works, right? This is a lending protocol or platform. You lend to people trying to borrow. They pay the rate, and the rate is variable. Just understanding that is really critical, because a lot of people are not actively lending or borrowing, right? So just understanding that in terms of, hey, this isn't just something happening behind the scenes. It's something that you're actively participant in is really key. And that there's a variable rate. Those two things are things that most people have actually never experienced, right? Most people are usually locked into a rate at like, hey, 3% of Robinhood, and maybe it changes once a quarter or every time the Fed rate changes, but maybe a few times a year. So a variable rate that can change every 16 seconds is very new. Getting them basically into that premise is the main thing. We don't talk about networks in the first few screens or chains. We don't really talk about USDC or stable coins. And we don't really talk about the protocol at the Aave Morpho level just yet. All that information's in the Nook app, but in the first 5 screens, you just have to understand that you're depositing your cash, you're lending it to people who want it, and you're getting paid the market rate. And that's really powerful to start if you'll trust us. From there, I think it's about explaining like how it all works behind the scenes. But the best way I found in life is to really understand something is to try it out, right? If you've never swapped, ETH for WETH, or, never done a derivative or a liquidity pool on Uniswap, you can read extensively the docs, or you can spend 5 minutes trying to figure it out. And I think there's a very strong mechanism in muscle memory to trying something that if you do it once, even if it's just $5, you get the hang of it. Like, oh, I deposited. It took a few seconds, or, I went through Apple Pay. That is super powerful. And so that's why within the app, incentivize you to start with, $5. And in real life, if you meet me and you don't know anything about Nook, I'll be like, just try it out. Just put $5 on there. I'm never going to say, hey, this could become 10% of your portfolio, or you should put X amount. I think now I'm not in the business of giving financial advice. I'm not trying to push something on you. I'm trying to get you to try something for once and then see what your experience is and have the experience speak for itself.
Yeah. On that, I imagine that's a common flow too, right? A user puts a little bit, kind of a trial amount of money. They see that it works. They see the, ticker going up of how much they've earned. They add a little bit more. They add a little bit more, maybe set up a recurring payment or something. And then just that progressive trust, basically.
Exactly. And so as they progress, there's auto deposits, and there's more information, right? So on each source level, we list, hey, what's the total number of deposits, total number of depositors, all that information. And then also that's where we pipe in the data from you guys, right? On the vaults FYI level. And that's where we show the reputation score. And I think that just helps brick by brick build trust, right? You can't consume all of that information on your first deposit, but you can consume some of it. And then maybe you go back around and say, hey, I've got $500 to deposit now. Let me go look at this new source that was added yesterday. What is the reputation score? What is a network or a chain? And that kind of piece by piece education, I think, is the best way to get into anything as you go. And so I think when you say like, what are the biggest challenges or risks or drop off points that you see people take? I don't think any one of these pieces individually is too much for someone to really understand. What I do think is all of these at once as a tsunami of information is where you see people freeze, understandably so. So we cannot show you the chain, the assets, the protocol, the TVL, all of that at once because it's just too much. I know a lot of people within this space are used to that because we have those synapses kind of wired to quickly scan for that information, but that is an overwhelming experience. I mean, imagine ordering your first cheeseburger and you're faced with 15 different options. It's a bit too much at first.
Yeah, and I think just having used the app, that abstraction is one of the things that feels very different to me as someone who, wants to kind of get more detail, but totally makes sense. And I guess on your side, you're obviously catering to this different type of user that you've spoken about.
Right. And I think that's something that we're always working on, right? Because you're not our target audience, but I don't want you to feel like this is not working for you. At some point, I want the experience to kind of be like Coinbase, right? So Coinbase has done, I think in my mind, a very good job of Coinbase Simple and then Coinbase Advanced. So even if you are an advanced perps trader, et cetera, you can still go in and use that platform and it will speak your language. It will show you the information you want to show in those 20 different, data points on an asset or so. And so we're not there yet. And I know other platforms have been trying this, but I don't see why we can't eventually get to that point where you have all the information you need based on what you're trying to do and your skill or experience level.
Yeah. Well, so I guess I'll ask the opposite of a question I asked earlier. What's kind of the drop off point?
Yeah.
I guess, is there anything and obviously you've talked a bit about this, but is there any kind of specific thing you found like, okay, this is the fastest way to get to trust with users? Is it just coming from a familiar source or word of mouth or something like that? Or
yeah, great question. So there's, I think, 3 things that work very well, and it's all basically centered around existing primitives in the real world. So one is referrals, right? So we've had over 2,000 referrals to Nook, and these are just basically, hey, here's my link, here's my code, use it, right? And that is a really strong bond when a real person is referring it. It doesn't need to be a friend or family member. It could just be someone on Reddit. It could be someone on X, Instagram, et cetera. And so that's why we really are a fan, and we've tweaked this referral flow over and over again to make sure it's as easy as possible. And so you can add up to 5 referrals, right? There are some caps, but basically like anyone can refer any 5 people and get a 1% bonus per person. The second is that 1% bonus is we do it in cash, right? You get a 1% bonus for 30 days on your deposits. And so at the end of 30 days, we pay you out that one right there on the spot. There are no points. There is no redemption. There is no kind of mechanism per se. It's just straight to, hey, I get 1%, right? And I think a lot of crypto teams will complicate that in order to increase kind of their TVL or their stickiness, right? So people don't just take it off the platform or immediately redeem it. But people in this world don't really get that, or they don't want that. So straight cash bonuses is the most effective in my mind. And I think the third is people. Again, I don't know if I love it, but I respect the crypto culture of profile pictures and, anonymity, artwork in terms of representing you in this concept of not being really a person online, but more of an entity. That doesn't work with people in most people in everyday life. So in the app, on our documentation pages, like we have videos of us, we show our faces. Like, this is me recording my face on this podcast. I think that really works. So all of our promotions, all of our content, all of our marketing, our educational tools, our email sign-offs, like that's coming from a real person. You're not dealing with a faceless entity. You're not dealing with bots. You're not dealing with, a lot of the shortcuts I think that some larger scale companies will take. I think it's easy to overlook that, like things like customer service and, handwritten emails in the era of AI, but that actually helps a lot in building trust.
Hi, this is Ryan, your podcast host. This one's for the builders. If you're adding yield or DeFi capabilities to a wallet, exchange, neobank, or fintech app, Vaults.fyi is the API for it. One integration gets you market data, transaction payloads, and portfolio tracking across over 1,000 vaults on over 20 networks, trusted by companies like Kraken, Gauntlet, Jumper, Arbitrum, and many more. You can go from zero to a live earn experience in days. We handle the protocol complexity, and you earn revenue on the TVL that you drive. Check out the docs at docs.vaults.fyi. Links in the description. Now, back to the show.
Yeah. Excellent points across the board. Coming back to something you mentioned a bit earlier, Coinbase starting to get into this space. And, it feels like Earn kind of went from this thing maybe, I don't know, a year ago or maybe about a year ago exactly is when it kind of began. Like everyone started thinking about, hey, how do we kind of offer something like this? How are you thinking about that new landscape and ultimately where a user will decide to deposit those funds? Maybe a bit less from the which protocol are they going to choose, but the more, hey, which platform am I going to choose? Whether that's a Nook, whether that's a Coinbase, whether that's a pick your vet.
Yeah. So I think distribution is key in terms of if you've already heard of some of these protocols, it's probably too late for Nook, right? If you already are aware of Aave and you're already aware of Morpho or Euler or Fluid, you're a crypto person, right? And you've already got your spread of options, and that's great. Not saying Nook can't do anything for you, but um, you probably already have a self-custody wallet, Phantom extension, Coinbase extension, MetaMask. And so where we want to reach people is not at the crypto level, but again, the consumer level. And I want us to win that space, right? And so that if you've never heard of this before, we can access you. Maybe you've heard of Coinbase and you're familiar with crypto and you're crypto positive, but you have never really taken the core action that we're offering or supporting you with, which is DeFi lending. And so I think about the space, I think about that focus and that mission. We want to help you earn more. We do not hate banks. I mean, I'm not a huge fan of most banks. They just operate very slowly, but we're not on a mission to debank people or to get them off of banks. We're here to help you earn more. And I think like what we saw this weekend, I don't envision a world anytime soon where DeFi lending in this earn space replaces treasury bills and banking, right? The risk reward is not there. If you're earning the same amount in your DeFi lending app as you are earning in your bank account, something's wrong, to be totally frank. So I don't want to create a neobank just for the sake of saying, we're better than banks or we're different than banks. I want to help you earn significantly more. And that watermark is really around 2x more. So if the Robinhood rate's at 3% or 2.5%, I'm aiming for 5. And we want to help connect you to those sources that can help do that at scale safely. Sometimes we'll fall short in terms of, maybe we're more at like 4%, but that's really our goal. And so that's how I think about Nook and earning in the space is carving that space out. So it's not just a feature. I think in the past 6 months, we saw a lot of companies add DeFi earn to their product. Hey, we, like you said, like, hey, we added it, right? Like it's here. But if you go look back at those products, some of them are earning less than just holding USDC, right? Some of them are below 3.5%. And so I think they just kind of did it to launch it and say, hey, we launched this. And as a retention tool, which I very much understand, that's a part of like big companies and that's a part of building out roadmaps. You have to keep launching stuff. But I would ask the question of like, are they really serving that job to be done of earning? Are they really giving the user what they need? Or did they just launch something, get good press, and then, make a splash and move on? That's where I would say Nook differentiates. It's like, we're not just here to ship you 4 or 5 features and throw a set of features at you similar to a bank. Like, we're here to help you earn more. So anyways, long story. I want Nook to be the place where you can earn the most in the way that's right for you in terms of the risk and reward adjustment.
Yeah, two kind of interesting hopping off points there, but maybe first we could talk about risk.
Yeah.
We're obviously recording this. Today's April 20th. I think the past 3 weekends, we've had 3 security incidents in crypto, Resolv, Drift, and now Kelp, which seems to be having the most kind of ripple effects throughout other major protocols. There's a big extent with Kelp where I don't think, and this is true of maybe all 3 incidents, but maybe particularly of Kelp, where this is maybe the first time where we've seen kind of people shake confidence in something like Aave, really, I think, for the first time in a while, in a long time. Curious how what does your weekend look like in a situation like this? I think, are you kind of forcing auto rebalance? And I'd love to dig into some of that. And then 2, and maybe take the second one first if it's easier, is just how do you and Nook think about risk in crypto, which is such a tricky question.
Yeah. I'm more to get your answer. I think you probably know more about this than I do. I mean, so for me, it's a conversation, right? I am a very big fan of tribes. And when I mean tribes, I mean just the social knowledge of people. And I think that's why crypto Twitter is so successful and connective and addictive at times, is because everyone that knows anything is on there. for the most part. Sometimes there's some false signal and sometimes there's some attention grabbers or ambulance chasers for sure. But there's also very good signal there. And then also in these open Telegram chats, it may look very ineffective at first of like, oh man, this is a very junior industry, but I'm a very big fan of talking to people. And so for a weekend like this, I'm glad I have great relationships, right? And we have great relationships across the industry. The main relationships I look for is one, at the protocol level, right? So the Aave and Morpho teams are very responsive and helpful. Two can be mostly at the curator level. So we work with Gauntlet and Steakhouse directly. We have a direct line of communication with them. And then three is the vaults team, right? We can talk to you to verify any data. So I think being able to understand what data is known, what is not, what the professionals in the curation space know and what they do not know is the most important thing to do in a weekend like this, because you're trying to figure out what's real, what's not, like what's hypothecated or what's rumored and what's real, because there's a lot of fog of war. So on weekends like this, I'm mostly talking to people to understand what they know, what they don't know, and try and push back on, is there anything that you might know that I don't know? Or is there anyone we should be talking to that we're not talking to? Because I want to constantly challenge myself on my assumptions that everything's all good. We do have a dashboard on the number side, looking at all of our vaults that users are connected to through Nook. Through that dashboard, we know how many deposits are in their total, what's the liquidity of those, and then what Nook represents in terms of those deposits. Are we 5% of this pool, or are we 20% of this pool, 25% of this pool? Because there are times where we can represent 30, 40, 50% of a source as Nook depositors. And so that's where I'm heavily, concerned at times of, is this healthy? And so this weekend, I'm happy to share that, obviously no customer funds were lost and we didn't have any major issues, but there were some times where liquidity became an issue at certain points. So if you did want to withdraw large funds of $50, $100, $1 million at some points, which we do have Nook customers that have that, there would have been issues in terms of withdrawing. And that's planned for in the app. There's messaging around that, but it's still not a good experience, right? And if you're not familiar with liquidity, it's one of those things that is scarier than you may think, especially if you don't understand the context behind it. So when the Aave base vault did go to, or source did go to $0 in liquidity last night, like we were watching that and we were proactively messaging any consumers that wrote in that were concerned about their withdrawal ability. So what I'm really looking for is like one, communication. Do we have to start communicating proactively to our users? We have a playbook on what we say, what we don't say, in order to just tell users very straightforward what the situation is without causing panic. Two, we do have the naughty list in terms of, here are the 8 sources we have, but we are very much willing to pull a source in terms of, you can no longer deposit into this as a Nook customer, because we just don't feel like it's the right thing to do. Right. And if you are hell-bent on depositing into that source when money's moving out, that's why self-custody is beautiful. You can always move your money off of your Nook wallet, move it into a Phantom wallet, and then go, or base wallet, and go degen from there, as they say. But we know our customer base, and we know that we'd rather be on the safe side. However, what we're not in the business of doing is forced reallocation, right? So we do not want to say, hey, you put your money into XYZ source last night, we're going to move you out of that. We feel like that goes against the ethos of self-custody. And we don't know you exactly in terms of what you want to do. We might think it's high risk. We might think it's not a position you want to be in, but maybe you do want to YOLO into this very high risk source, right? Like, we don't know who you are. We might think $20,000 in your Nook wallet is a lot, or $50,000 or $100,000. Who knows? Maybe you're worth $20 million. Maybe this is just your fund money, and you want to be on the frontier edge of earning. So that's how we think about it, right? We ultimately really don't know you, but we're not going to move your money. But ultimately, like, we are going to remove a source or temporarily block deposits to a source if we are concerned. And we have done that before.
Makes sense. And actually, how do you guys handle the rebalancing? Because to me, at least, that's kind of a core value prop of the app, kind of the yield optimization piece.
Yeah. So we're built on Privy. So through Privy, you're able to log in through email or auth through Google and Apple. So basically, email-based login in which you keep the shard, and then we, to the Privy side, one shard is kept as well. So when those shards are combined, you're able to trigger a rebalance, right? And so therefore, we basically can do a multi-chain, multi-protocol rebalance from one source to another. So we trigger the withdrawal from your current source. So if you're coming out of Morpho Vault A on base, that's triggered. And then we typically use CCTP to bridge. So there's typically a 20-minute delay for some cross bridging there, like from base to Optimism or base to mainnet. And then from there, it's redeposited into that new vault, Vault B, directly as USDC into Morpho. So I think what's different in terms of our rebalancing to some other apps is a lot of apps are just using supervaults and they're taking all of that money and rebalancing like $20 million at a time. So it's like my money, your money, Jake's money, Jessica's money. Hey, we're all going over to Optimism right now. And I think that can be good in a certain sense at certain levels of scale. Like there's definitely pros to that. But like if you, Ryan, just want your funds rebalanced to Optimism, like that doesn't mean you should take everyone else with you or have to deal with a super vault. Like it's still your funds, your wallet going directly into that 4626 vault on Morpho. We're not depositing you into this meta vault that's a vault of vaults.
Yeah, this is something we've thought a lot about too. We integrate many of these things that are, super vaults, but also all of these different vault standards that kind of handle the rebalancing in some way, or these meta vaults, whatever you want to call them.
Yeah, what do you guys, I'm actually struggling for the words. What do you guys call them? I've heard of multiple nomenclatures.
I think Supervault is Superform's specific standard. I would call them like managed products, really. And, kind of playing around with our own framework and language for this as well. But, on one end, there's kind of these Morpho curated vaults, which have a lot of restrictions of what the manager can do. On the far other end, you have these heavily managed products where in some cases you're giving a manager full discretion to do whatever they want with your funds across different networks, looping strategies, some cases, off-chain, over-the-counter Bitcoin options, whatever it may be. So there's a wide spectrum of flexibility in these things.
Right. And I think that also brings up the question of like, what's the legality of these managed vaults, right? And so with Nook, I don't know if we want to touch that necessarily, right? Because these managed vaults aren't necessarily licensed products with the SEC here in the States. And so I think there's very much a gray area. And that's why we want you to have control into which vault exactly you have. And then Nook is not like this intermediary middle layer.
Yeah, I think for your type of product and the user base, that makes complete sense because they're, even if you wouldn't say this as a more consumer facing app, they are kind of looking to you to curate the curators, curate the opportunities, like make sure the things that you're showing them are, kind of the highest integrities, generally safest type of things.
Yep.
I just think that the reason some of these managed products are getting more popular is that it allows the strategies to push out farther on the risk spectrum as well. And so that's really the only place you're seeing double-digit returns today. If you were to kind of go to our site, for example, that's where you're going to find stuff like that.
Yeah. Yeah. I think you guys are doing the right thing of just presenting the information as it is. I just wonder, I mean, the rules will change. The rules keep changing. I was at Coinbase when lots of rules were changing, to put it lightly, under the Gensler era. And so I think to act like the rules now will be the same as the rules forever, I think is probably the wrong approach because we're building for the longer term. So we'll see how it plays out. Maybe we'll connect to all sources, even the managed sources. Yeah, right now we want to follow the rules as closely as possible and have you be the one, making those changes.
Yeah. So one of the other items you brought up was, looking at some of the other products that exist in the space today, the yields are kind of far below T-bills in some cases. And I think in my studying of some of these, one of the reasons for that is that different venues charge different kinds of fees on top of these products, in order to sort of build their business around it. And in some cases where those fees are very high, that's what drags down the APY. I'm curious how you've thought about what the sort of long-term business model is around, some of these integrations and things as well. How you're thinking about that? Does it require adding other payment type of products, or do you think you can monetize or earn directly in a large, sustainable way?
Yeah, it's a good question. The answer is no. Right now, we cannot monetize in a large, sustainable way. Like we're not going to be doing millions of dollars in revenue off of the take rate that we have now. So we have revenue deal shares in place with our curator partners, right? And so that's really helpful in terms of it's a business that's structured well so that when the consumer wins, the curator wins, and we win. Right. It's not based off of a take rate, a spread basis, like on trade, where if your fart coin drops by 50%, the house always wins. So I really love that in terms of the ethos of it, but it's not a massive multi-million dollar a year business. What I think we are angling towards is one is making this connection between Nook and earning and these sources, and then building upon there in terms of business models, right? So there's still a lot of paper cuts in our experience today, like the T5 delay. If you want to deposit onto Nook, you're waiting 5 delays to get that money. So 5 days may not sound like a lot, but it can be, right? Especially in terms of deposits, but then also withdrawals, right? So we're facing more like a T2 in terms of withdrawals. But if you compare that to Venmo or Coinbase or any platform that's doing like RTPs or instant cash outs, that's a long time, especially if you have to pay rent, pay a bill. A lot of people are used to having that money pretty much immediately. So I think what we're going to see in the future, like build upon in the future, is earning is our southpaw. Like that's our left hook of, hey, Nook equals earn more. From there, if you want to move money immediately, diversify elsewhere into stocks, bonds, commodities, other crypto assets, we can help you do that as well. We've been talking to several partners on the side of how we can integrate that into the app. But
Nice.
yeah, I think there's a few ways to do it, but you're spot on. Like I haven't seen any app just generate revenue off of purely DeFi earning without doing a token play or committing some sort of committing some sort of crazy mechanic in the background. Let me put it that way.
Sure. I'll leave that open-ended for you.
Unless you see another way. But I think the way to responsible, scalable yield isn't crazy take rates or something irresponsible, essentially.
Yeah, I guess the thing that I'm probably most observing is if you rewind the clock, say 9-10 months, where yields were much better, the sort of go forward path of someone taking a performance fee, there being some room for a platform like yourself to make some money either from the curator or on top of that as well. There was sort of a lot of margin to go around. As we're in this current rate environment where rates are maybe on average 4% or less across the Aaves and Morphos, excluding yesterday's events, it's much tougher to kind of figure out what that stack looks like, where pretty much everything today is performance fee based. So you're very, very rate sensitive in terms of what the whole stack of players here is making at any given moment.
Yeah, I think the stack is still the rates are low relatively right now. I think we'll see spikes in rates, and we definitely have to take advantages of those 2 or 3 months out of the year if they happen again to take a higher rate. But on the inverse side, compared to TradFi, where asset managers or wealth managers are still making 50 bips or 25 bips off of AUM, like there's still a lot to be made, I think, in the DeFi space because it's so new and because it's still relatively so profitable in some areas. So I think everyone's talking about yield compression compared to 6 months ago or a year ago. Sure, it's definitely worse, but the economics are still a lot better than what you're facing in a TradFi environment, from what I understand. So I'm still looking at this compared to existing TradFi products and seeing a lot of opportunity. And that's where our investors saw a lot of opportunity as well. Let me give you an example. I won't name names, but it's pretty easy to find. But there is a large exchange running a DeFi earning product within their app. They're a big player. I don't know, probably top 5 by total deposits, maybe top 3. In the hundreds of millions. They're taking a 25% spread based on the earnings that they're generated from the users. A 25% spread is pretty big. That you don't typically see too much in the TradFi world on these established bond earning products. So I think, yes, there is a lot of, it's not as good as it was a year ago, but I still think there's a lot of spread to be made in terms of helping consumers here and doing that hard job of helping consumers, especially if you help people with payments and transfers.
Totally. And we don't have to pick on any one exchange because I think actually most of the exchange products I've seen are charging 20 to 25% fees on top of the existing fees. So I think that's actually kind of becoming the standard for those very, very large sources of distribution of what they kind of feel like they can charge. Further to that point, I think where I kind of see it today is, the way that these more TradFi products work is that they have, higher certainty of billions of dollars of AUM. And so charging a smaller amount on billions of dollars, usually actually kind of like a management fee as well, gets you to a place where you can pencil out how all of this stuff starts to come together. I think the place that we're in crypto though is, when someone's sitting down kind of doing the spreadsheet of how much are we going to make on this thing when we integrate it? The sort of total deposit number they're simulating there is much
Denominator is
smaller.
huge. Yeah.
And that's, hey, we gotta increase this fee a bit so that
Yeah,
this thing,
yeah.
you know,
I think those
yeah.
teams move in much larger scale. I mean, I used to be one of those teams, right? They move in much larger scale, but they move slower, right? So how do we as Nook operate as a team that's a tenth of that size? We have to move faster into more time sensitive positions, right? So if there's a great rate on Agora, on the Monad chain, how can we get there faster? I will admit we haven't moved as fast as I had hoped. I think that's a good balance. I mean, there's a balance to strike with an engineering team and then, risk and reward. And I'm very happy in terms of like how, we have not lost any users' trust and we built a solid product. But yeah, there's some opportunities that we've missed out on. So the question is, I guess in the future, hey, there's this opportunity over here. It's probably only going to last 3 weeks, right? Can we get there in 3 or 4 days and connect users to that source before the big exchanges can? Because based on their volume, their size, like by the time that they get there, it won't exist anymore. So I think that is what we have to do, is be nimble and basically help you play Moneyball with earning multiple sources, multiple deposit assets, multiple opportunities. That type of system is harder to build, it's more flexible. As you know, you connect with hundreds of sources, but I think that's the route forward versus just one monolithic connection to one source.
If you could wave any kind of magic wand and, some other company, not something that you have to fix or build, like what would you change about crypto at this moment, or what other products would you like to see exist out there?
Oh my God.
And not to put you two on the spot, I'll give you,
No.
Yeah.
This is a great question. I'm curious to hear your answer as well. So unfortunately, I was going to say our 2 biggest issues are probably transferring and preservation of your wealth across different positions, right? How do I go from USDC to Agora quickly and cheaply? I think as crypto traders, people are used to a spread. So, hey, if I lose, 5 bips on slippage or fees, cool, that's all right because I'm trading, right? But if you're, this is an earning product and you deposit $10,000 and you lose $100 to those fees, people are not going to take you seriously. And they're not going to trust you. So I think the movement of money through bridging through, these and like what we saw, unfortunately, this weekend with like Layer 0, like that's one of the main challenges of the industry. And I'm hopeful. I know there's a few teams that are building or have built something like this, but I would love to see that simplified so that we don't need to go into these meta managed vaults. So that's one thing. It's movement of money across chains, across protocols, across assets, simplified. Because although we allow you to do it, it's still not simple in terms of what we do in the layer of code that we need to build. 2 is, I know everyone talks about it, and I don't know if it's scalable. Like I love the OpenCover team, is insurance. And I know Aave's talked about insurance. A lot of people have said like this will never happen. And at the current realities of, gravity is an inescapable force at some point. Like I think they're right, but I would love us to see us, I don't know, the industry somehow create some sort of escape velocity to the point where they escape gravity and do leave this perpetual challenge of insurance and somehow figure it out. Even if it just does return 4%, but 4% risk, 4% or whatever the treasury bill rate, 4% insured, I'd be very happy to see that. Those are 2 problems that I would love to see solved by other teams, because I know that that's not a problem that's well suited for a small team like Nook. Like we're product and engineer people. We want to operate at the consumer level. Those are really hard technical scale challenges that I'm really excited for other teams to take on.
Yeah, actually, I mean, just the last guest on the podcast was Jeremiah from OpenCover. And, we've got their products integrated as well. Yeah, insurance is notoriously tough.
Yeah.
Just kind of, and I think you actually you hit on it really well, which is the premiums on these, generally speaking, have been a bit too expensive. I am looking at some of OpenCover's, one of their products right now, covered a Smokehouse USDC on mainnet. This one actually seems pretty good. You're paying about a 1.5% annualized premium. The 7-day average APY here is 5.37 after that fee. So it's actually a pretty good, return at the moment. Like that's probably a trade worth taking.
Yeah, their covered vaults products are awesome. I had the team walk me through them the other day, and very promising. I think so. If they could do that, that would be amazing. But I think we're in this era of some of these primitives are still very much coming along. But if they all were to solidify, then all the pieces could be built together, and it could be a truly like cohesive ecosystem. But this is one of those weekends where we saw that we're just not there yet.
Agreed. Well, as we're coming up on close here, I'd love to get a bit of a sense of what does the rest of the Nook roadmap look like, for whatever, the next week, month, year, whatever's the right time frame to ask.
Yeah.
And, in a year or two from now, like what does Nook look like if everything goes right?
Yeah, absolutely. So I think going back to our mission, it's about Nook equals earn. So we want Nook to be the earning machine, and we want to connect you to more sources and let you do what you want with that, right? So bifurcate into multiple positions at once and also allow you to deposit with multiple assets. So if you want to be based in USDC, great. If you want to be based in other stablecoins, that's great as well. But pushing beyond that, it's like, how can you basically optimize all of your existing assets? So not just stablecoins, but crypto assets. And then as we see stocks and commodities come on chain, how can you leverage those as well? I think the future is just, we should not have as many assets lying around sitting idle. They should be earning something based on what your risk ratio is. And so that's really the future of Nook in the next couple of months, is bifurcation of multiple positions, working with the OpenCover team on coverage, potentially see what we can do there, and just helping you find that Goldilocks place of here's my risk and reward. That's the hardest, I think, psychological challenge about not just DeFi and earning, but also just finance in general is how do you find that sweet spot? And that's what we're trying to solve.
Amazing. Well, if anyone wants to check out the app, what's the URL? Where should they go?
Earnwithnook.com.
Awesome. All right. Well, thanks for all the time today. Oh,
Ryan, thank you for providing the service that you do within the Nook app as well, right? I don't know if everyone see that we've launched the ability to basically see a reputation rating on every source that you earn with. And I think the team's been working super hard on that. So thank you to you, Ryan, and Tyler, and the entire team.
Awesome. Well, thank you for saying that. And I hope we'll have a lot more to do together in the future as well.
Same here. Thanks for your time.
Thanks for the time. Talk soon.